California's housing market in 2025 is at a critical turning point. Inventory is rising, prices remain near historic highs, buyer demand is shifting, and mortgage rates are about to decide the entire trajectory of the next year. If you're watching California real estate right now, whether you're buying, selling, or investing, here's the reality of what's actually happening beneath the headlines. California's real estate market today is defined by one core truth. Even with more homes on the market than last year, the state still suffers from a long-term supply shortage. Data from major industry reports in early 2025 confirms that active listings have increased, but the deficit created by decades of restrictive zoning, limited buildable land, and slow construction remains enormous. California can add new inventory, but it's still not enough to fundamentally change the supply and demand imbalance that drives prices here. That's why the statewide median home price continues to sit near or above $800,000, among the highest in the country. And while price trends differ across regions, the pattern is clear. High-demand coastal areas like San Diego, Orange County, and parts of the Bay Area are regaining momentum, while certain condo-heavy markets in San Francisco are still seeing longer days on market. Meanwhile, more affordable metros such as Sacramento, the Inland Empire, and parts of the Central Valley continue to draw buyers priced out of coastal cities. The single biggest variable shaping the next 12 months is mortgage rates. California is more sensitive to rate changes than almost any other state because home prices are so high. Even a small rate shift changes affordability dramatically. Current economic forecasts suggest rates may ease toward the high-5% range later in 2025. If that happens, buyer activity is expected to increase quickly, especially in competitive markets like San Diego, San Jose, Long Beach, and Orange County. If rates stay elevated, demand will remain controlled and price growth will flatten in certain submarkets. Population trends also matter, and the narrative of a mass exodus is overstated. While some residents have left the state, the overall outflow is slowing. Immigration in Southern California inbound migration remains strong. California continues to be the most populated state in the country by a wide margin, and its economic centers, technology, entertainment, biotech, logistics, continue to support steady housing demand. Investor activity is also reshaping the market. While California does not attract institutional buyers at the scale of the Sun Belt, investors remain active in markets with better rental yields such as Riverside, Stockton, Fresno, and Bakersfield. High-end markets in Los Angeles, Orange County, and the Bay Area remain supported by cash buyers, many of whom are unaffected by interest rates and help stabilize luxury pricing. Real-world trends reflect this split. In Southern California and parts of the Bay Area suburbs, properly priced homes can still go above asking. In contrast, some urban San Francisco condos may sit on the market for 30-45 days. California is not a single market. It's a large collection of micro-markets, each responding differently to economic forces. Looking forward 12-18 months, the most likely scenario is moderate but steady growth. If mortgage rates fall as projected, California could see 3-5% statewide appreciation, with stronger gains in the highest demand coastal regions. If rates remain elevated, growth will be minimal and certain urban pockets may soften. A major correction remains unlikely due to the state's long-term housing shortage, strong economic foundations, and consistent base-level demand. For buyers, preparation and clarity are essential. Know your budget, follow local price trends, and be ready to move quickly when rates shift. For sellers, this is a strategically favorable time. Inventory is rising, but demand is still active. For investors, California remains a long-term play that rewards disciplined analysis and stable holding strategies. California's housing market isn't collapsing or overheating, it's adjusting. And understanding these shifts is the key to making smart decisions in 2025. If you want a breakdown tailored to Los Angeles, Orange County, the Bay Area, Sacramento, or San Diego, let me know. Each region has its own story.